Good morning, friends. Welcome to the point. In today's video, we will discuss the important taxes that are prevailing in India and acts as a very important source of revenue for the central and the state government. So, as you know, and I have told in the previous videos as well, that tax acts as a very important source of revenue income or revenue receipts for the government, and it is through these or the collection of this revenue that the government plans its expenditure and spends it on the citizens by somewhere or the other, or maybe use it to run scheme or to spend it on developing infrastructure in the country. So every government of every country, be it any country you take it, so the government belonging to that country tries to maximize the number of people that fall in the tax bracket so as to collect tax from it, because it is through the channelization of this revenue only that they are gonna run the country and manage the expenses of running the government. So let's start with the important taxes. So the first one is the income tax, and income tax is the tax that is paid directly on the income or profit earned and is collected by the government of India. So first thing, it is a direct tax. You don't have to forget as to what direct tax is. So the direct taxes are those on which incidence and implication is on the same person. That means you cannot transfer the liability of paying it or clearing the tax. How? If I am earning something, so income belongs to me, so the liability to pay tax is also on me. The onus of paying the tax also lies on me rather than my parents or my siblings or my friends. Why? Because the income is belonging to me, I have earned it, so the liability to pay tax also is on me. And it is collected by whom? It is collected by the government of India, and all the provisions of income tax is mentioned under the Income Tax Act, which was enacted in 1961, and it governs the provisions for deduction as well. So there are many deductions that you can claim under income tax that will makes your income tax free. So all those provisions are also mentioned under the Income Tax Act 1961. It falls under the category of direct tax, as the burden of tax cannot be passed on to the other person. As I have told you earlier, there are various slabs for the payment of tax based on the income earned as well as the age of the person. So every year the government in its budget lays down the slab for the payment of taxes, and the slab varies as per the income earned by the person as well as the age category of the person. Definitely for the senior citizens, the tax rate is lower as compared to the other citizens. So this is about the income tax. Moving on to the next slide, talks about the corporate tax. So income tax was levied on the income of an individual. What about the income of the corporations, business houses? So there on the income of business houses or corporates or companies, it is the corporation tax is levied, and it is also levied under Income Tax Act because it is also an income for the company, no? So for individuals it is called as income, but for business houses or the corporates or the company, it is known as profits. So on which corporation tax is levied as per the Income Tax Act 1961. Corporation tax is levied, which is a tax which is levied on the income of registered companies and corporations. Government sometimes changes the taxation rate in order to provide relief to the companies and induce growth in the economy. Central government levies this and collects the tax. So now what is this point? The government changes tax rate in order to induce growth. So what happens is, if you take the example of 2020, the government reduced its corporation or corporate tax rate from 30% to 22%. Why? So as you know that there was a lockdown for good 5 months, and there was a recession in the economy, due to which there was a slowdown in the production process, and in order to bring back the economy on the growth trajectory, the corporate tax rate was reduced from 30% to 20%, and this will allow the company to have more cash. Why? Because earlier where 30% of tax was collected as a portion of income, now it is just the 22%. So the difference between this will leave the company with more cash, which it can use it to make more investments or to set up new manufacturing units, which in turn will lead to new employment opportunities or create new employment in the country. So that is why this was reduced. And government, it is not that the first time the government has resorted to such an action. Earlier also the government has reduced the corporate tax in order to induce growth in the economy. Last important tax that we need to study is the dividend distribution tax. So dividend distribution tax, as the name suggests, is the tax on the distribution of dividend. So what is a dividend? So as you know that the company gets its share capital from the equity shareholders, right, as they provide the capital to the company. So for investing the money into a company, these shareholders are entitled to some return. And how are they provided with the return? They are given the dividend. And when is the dividend given? After all the expense. So first is the revenue is earned, out of which all the expenses are reduced, the taxes are paid, and if anything that is left is distributed amongst the shareholders. It is not necessary for the company to declare it every year, but in order to attract investors and to maintain a good goodwill, companies often resort to paying off the dividend to its equity shareholders. So it is a tax levied by, so whenever this dividend is distributed to the shareholders, there is a tax that is levied on that, which is called dividend distribution tax. So it is a tax levied by the government on the amount distributed by the company as dividend. It is payable in addition to income tax. That is, though you are paying the income tax, but if you get dividend, you are also supposed to pay the dividend tax. The company shall be accountable to pay the tax within 14 days from the date of announcement of dividend or payment of dividend or distribution, whichever is earlier. So the time frame or the time limit to pay or clear the dividend distribution tax is within the 14 days to these three incidents, whichever happens the first. Dividend constitutes income in the hands of shareholder, which ideally should be subject to income tax. Any domestic firm distributing dividend has to pay at the rate 15% on gross amount of the dividend as per the provisions of Finance Act 1997. So if someone asks you who governs the provision of dividend distribution tax, it is the Finance Act and not the Income Tax Act. It had to be paid by the firm within 14 days, and which is the earliest that we have discussed. It got completely abolished in 2020 to make Indian equity markets more attractive for the foreign investors. So what effect it will have on the equity market? It is that earlier this was such a demotivating factor for the investors that, let's suppose if 1 lakh is the amount, gross amount for the dividend for Mr. A, so out of which 15% is taken as a tax, so what remains is 85,000, right? So in order to make the equity market more attractive, government has waived off and removed this tax, so that when the investor gets to know that they will get the whole amount, that is the gross amount, without paying any tax, then definitely they will be attracted to invest more and more in the Indian companies or the Indian equity markets. So this action was taken, or this step was taken last year only, where it was removed after, when the budget was laid down after this lockdown was over. So this is about the dividend distribution tax. So we have covered the three major taxes that one should know, not just from the exam point of view, but also from your general life point of view. You should be aware about these taxes, as once you start earning, you will definitely have to pay income tax to the government. So friends, this is all for the today's, and it's a humble request to all of you that please keep revising the videos, maybe once in 7 days or once in 14 days, so that you don't forget the videos that we have already covered. And with the time passing, you can start connecting the dots in the economy lectures, and that would help you make your concepts more clear. So friends, thank you so much for your patience listening.